did. And so I come back to the comment you made at the recent MPGC event in Dubai. And if I paraphrase you correctly, you said that the second half of the year would see 2 million barrels a day more demand than where we were currently at. And that was, I think, about a month or so ago. Is that still your perspective? How do you see that balance going into the second half, this year of two halves? Does that narrative still survive?
Yes, perhaps I need to clarify. There's a general consensus which has been echoed in conferences since MPGC also that supply is a little bit higher than most had anticipated, whether you look at provinces like Guyana bringing on streams, whether they're looking at US output. And then on the demand side, it's just disappointed a little, as I alluded to before, not just with China, but the general softer global economic outlook for energy intensive industries. At the same time, of course, there's been a penetration of cheaper fuels into the space traditionally occupied by oil, namely coal, certainly in Asia, which is also the LNG story I've talked about many times over. So then to the seasonal aspect, I think most research shops and most research departments in Wall Street banks and large energy majors have a consensus around the fact that the year-on-year demand versus 2022 is up in the order of 2 million barrels a day, some are a little shy of that. And of course, there are a couple of definition issues around whether you put gas liquids and condensates into the mix or not, which of course are not in the OPEC plus total, for example. Within that range, and that consensus is pretty good since we're halfway through the year already, there is an expectation that there will be an acceleration in demand of jet fuel, which is still the major cut of the barrel where demand is missing. Largely, if you can oversimplify it down to the fact that we still don't have much international travel in and out of China and various other countries that haven't really come back to full travel since COVID, but primarily China. Overlay on top of that, the fact that there is a seasonal recovery in demand driven out of the West in summer and then Asia in Q3, Q4. You have this seasonal uptick in demand, which always characterizes the oil demand shape of the curve between Q2 and the second half of the year. So that's normally less than 2 million barrels a day, but it's compounded by the expectation that we will see more jet fuel demand. And even though we still don't see too many Chinese tourists around places like Southeast Asia, that expectation is there. If you look at the forward schedules of airlines, etc., and put all that into the mix, there is still a view that yes, there will be an acceleration in demand. Whether it's the order of magnitude I highlighted MPGC, probably not quite, but that is still very much the underlying scenario. Of course,
on that, I just wanted to jump in, Mike, on that and ask you your thoughts. If Saudi Arabia was not to continue with its 1 million barrel a day cut beyond July, would the market react bearishly to that? Would that be difficult for prices and holding in the range they are at the moment?
That's a relatively easy one to answer, really, Sean, because it's always down to gauging what the market's expecting. Where is the consensus ahead of any next decision point?
So that is the biggest next decision point, isn't it, on supply? OPEC, as we said, are meeting this week in Vienna, but that's a seminar, as you said. Saudi is in its own corridor now on this 1 million barrel a day cut, which is only for a month, and then they can decide, as they've said, what they will do. But in essence, they've kind of got themselves into a corridor here. To step away from it would be seen as quite bearish, I would have thought.
No, I think the market would agree that when the large producer says they're going to do something, they typically follow through. Of course, July was very prompt and upon us. In trading terms, it had already elapsed and traded. So in that sense, people are now going to be looking for confirmation, and they may not necessarily see it in the shape of reduced exports from the kingdom. They may well see it in terms of stock draws and in terms of the very large downstream system that Saudi Aramco has control over. And if you have to put various components together to assemble that total cut. So yes, I've heard speculation that they may contemplate extending it into yet another month. I think there is a consensus in the market. Had they announced a multi-month cut up front, that might have had a even stronger impact on markets than the 1 month did. But the fact that the market still seems to be trading in a reasonable balance. If you look at Brent, for example, the front spread, the backwardation between first and second month on ICE is barely positive. It went to almost zero. That's not telling you that we have a particularly strong market at the very front end, despite these volumes being taken off the market. So I guess we need to see a little more time elapse for us to see what the effect of this million barrel a day cut is and how it cascades through from essentially Asian-priced sour barrels into the actual benchmark crudes, namely Brent and Dubai. But I think it is fair to also point to the OSPs, not just the Saudi OSPs, but all the other GCC and core OPEC OSPs, to see that there is an intent there to price their baseload oil from many refiners at a more premium level to trigger an abstinence from those grades, and to have those refiners that would have nominated Saudi and Iraqi and Kuwaiti and Qatari and Emirati oil to go after alternatives, and those swing alternatives tend to be the spot barrels from the Atlantic Basin. So it's a little early still to see how all that plays out, but it should end up seeing a realignment of trade flows and a generally tighter picture, absolutely.
Well, I would suspect that His Royal Highness, the Oil Minister of Saudi Arabia, will be asked that question a few times in Vienna next week. And it'll be interesting if he takes that same posture. Either it's too early will be his answer, or will he actually answer it? Christophe, I wanted to take the opportunity to talk a little bit about Russia. I know none of us really are in the geopolitical expert box, but you have worked a long time in Russia. You know it well. How do you read the tea leaves on this event that happened recently, the so-called uprising that never continued? Is this a big deal? It certainly seems that at the headlines it's a big deal, and yet it's passed like it was nothing. Your just thoughts on reflection, and does it have legacy resonance for the energy markets?
I think it will have a legacy, and it was a legacy slightly different from what most people think. It's not as simple as that this was some conspiracy and then out walks a very weakened Putin. It's not as simple as that. I think, first of all, number one, this was genuinely pretty much the story we all read about now. Prigozhin sort of losing it, hoping for more support than he actually got, putting his troops in march. Putin, apparently, when you look at the TV pictures, slightly panicked, prepared to crash it. Lukashenko and others may be stepping in, negotiating this kind of exit deal. And Prigozhin has been very calm since then. Now, when does a mutiny fail, and when does a failed mutiny profiteers the incumbent? This happens when the two things in place in the case of Russia. One is if the incumbent captures...
Certainly served Erdogan very well a few years ago when his failed mutiny.
Yeah, exactly. And what is the requirement for that to work? Number one, the incumbent needs to capture the narrative, to control the story. So in Russia, that means Putin and others in his group, we shouldn't always fix on him as a person, need to control the story, saying we prevented bloodshed, cool heads prevailed, that's why the guy got away temporarily, and so on. Number two, they need to crush the mutiny, and with the severest way as possible. And I think Mr. Prigozhin has just painted a huge white crosshairs on his shoulder, on his back, and I think that...
This Christmas, I'd be surprised.
I think he will be, yeah, we should expect him to be killed, it's not clear when. And some other measures to be taken to degrade him, because it is essential, as I said, to make clear the consequences for everyone. But this particular event, also because it's pretty unique in history, bloodshed has been avoided the last minute. Normally they always step to the brink and then one more. But in this case, they step back from the brink. I think that might, in the short term, actually strengthen the current regime, in the sense that it takes Putin a little bit, puts him under pressure internally, but there's nobody immediately willing to step up on it. And if the war if there's no breakdown, then in the short term, the public will also step back a little bit from fighting each other too much. And they will say, okay, the most important is that we remain cool under pressure and prevent the empire from breaking up. In the longer term, if you, as me, believe that the Ukrainians will probably be capable of making some, in the longer term, let me just say, it depends on what happens on the battlefield. If you believe the Ukrainians will make a breakthrough, Russia will come under such pressure that we should expect regime change, one form or another.
Just to follow up on that, Christophe, another big event this month, or in the month of June, in your home country of Germany, was the declaration of a new security policy. Essentially, Germany re-engaging the world with a front foot forward on security posture. Your thoughts on that and what it may mean for Europe?
Germany engaging the world in a front foot forward posture. Down.
Yeah. Well, they made a very
significant
policy change during the last few weeks regarding its engagement.
Well, it wasn't the last few weeks. It was announced after the invasion of Ukraine. It's basically implementing what happens there. I think, given the state of the German society, this will be a gradual shift. Too slow for many, certainly too slow from a Ukrainian perspective and other hawkish countries' perspective. And still, I think that a majority of people here in their hearts hope that it will not be necessary, but their heads tell them that the world has become so unpredictable that they will, have to spend more than 2% on the army. But it's not a really big shift. It is more that the people in power, both the Greens and the Social Democrats, were the ones who for a long time thought you could rely on Russia, on this energy partnership and this gradual change through trade. And now they have to be a bit more on the hawkish side to compensate for this very obvious error, which they made.
Mike, looking again on the supply side of the story, you mentioned Guyana and some of these others, but I wanted just to get your thoughts on the outlook. We had a story on our digest today of the Americans meeting the Venezuelans in Qatar, of all places. We've got Iran would appear in talks with the US again, and also moving as much oil as they possibly can, I think, at this stage, and the Russian oil continuing to get to market. That these very big players in the oil markets, they're not marginal characters like Guyana, obviously Russia, Iran, and the potential for Venezuela to return. Your thoughts of where they are coming into this more than expected supply piece at the moment and going forward?
Yes, Sean, you've touched on some pretty big pieces on the chessboard there, if you like. But you can always read things two ways. There was a set of statements last week about a lot of the floating inventory of Iranian oil, sanctioned everywhere bar China, right? Having been depleted, having been taken to market. So some will say, oh my goodness, that's really, really going to weigh down on the markets, that's bearish. Others will say, well, it's gone now, so therefore it's no longer there as spare supply capacity. So that's just one example of how you read things two ways. I don't know what to make of the diplomatic engagement that allegedly took place in Qatar 3 weeks ago between the Venezuelans and the Americans, but I don't think we should overestimate the capacity of Venezuela to flood the market with oil. There's been decades of lack of investment there, which is going to require some serious investment before Venezuela can return to its former glory in terms of production capacity. In other areas, we still don't have, at least unless I've missed something, we don't have restoration of flows from northern Iraq, from the Kurdish region through Turkey, despite the fact that the Turkish election has been a settled affair. I may have missed that. I've had a couple of days of leave here. You had a headline in your digest about concerns over disruption of exports to Sudan. Typically in flashpoints where there are civil war type events, oil continues to flow because whoever controls it wants the revenue. So I'm not sure we should attach too much importance to that. You probably have some sort of negative impact from the disruptions in France today. And it's that time of year where you get typhoons in Asia and you get hurricanes in the West. And for the very first time, the benchmark of the world, Brent, has a hurricane exposure because the vast majority of the barrels that can come in to set the BFO/ETM for Midland benchmark could be affected by delays in the US Gulf in what appears to be a season which is not just characterized by the return of El Nino, but extremely high surface temperatures, water surface temperatures, all the way across the Gulf Stream to west of the UK. And this is already generating cyclonic activity in June, which most people know is a little early for hurricane season. So one has to price in a certain amount of premium, or what I like to refer to as speculative froth, into the outlook for the size of the export program from the US, should there be any hits on the export infrastructure in Corpus Christi and further across in Houston.
Sean, can I add something on this supply demand?
Please. Yeah.
Because I think it's actually a very simple principle at work here. And the world has overestimated demand and is slowly sort of coming down to that, and demand figures will be downgraded over the course of the year. And demand, of course, is a function of global economic growth, simple. But supply is a little bit different because supply can be adjusted much faster than demand, which moves very slowly. And we shouldn't pretend that the oil market is an entirely free market where supply only depends on what is produced and what kind of random weather shock we get. And this is where the in quotation marks, beauty of the Saudi cuts comes in. If they maintain they are now, again, they have the lever. They can, in this picture where supply turns out to be slightly bigger than expected, as analysts agree, they have a way, a very simple way of regulating supply, knowing what demand is going to be and knowing that demand cannot react very fast to that. And so the answer to your implicit question, what happens next month, and so if they really want higher prices, here's a chance to get it very easily, and that's what will happen.
Let's get the survey question and then ask Christoph and Mike about their outlook for the next 2 months, because of course we will be taking our summer break and we won't have them back till early September. So the question we're going to post on social media today, and we'll start with the gathering here. Brent crude oil stuck around 75 due to 1, supply excess, 2, weak demand. And ultimately it's both, you would have to say, but what's the dominant narrative, do you think, going at the moment and through the summer? Supply excess or weak demand? So Mike, of course, it is July. It's you know, typically going into the holiday season where the markets are distracted, traders go away, and volumes decline. Your thoughts on the next 2 months, the summer period, and will, you know, we come out of it with this market having a much more definitive direction? So I welcome your sort of outlook for the summer period.
Yes, well, Christoph has, but I haven't mentioned Russia yet, so I think we
yes, if you're
keep one eye on that. But Russia has continued to come in with its exports of both refined products and crude oil at the higher end of expectations. Many people had assumed that there would be lower exports, and that continues to run at pretty big levels. So much so, of course, that people are saying, are they actually producing more than their end of the bargain under OPEC plus? But is
that essentially all going to Asia?
Well, of course, on the crude side, we have the Indian market, which is your prime baseload market, taking pretty much as they technically can. And then, of course, the Pacific flows are all ending up in the Chinese market. So that's on the crude side. On the product side, much more interestingly, yes, you have a much larger export program of products from the Baltic and from the Black Sea. And those flows are largely having to find their way through the Suez Canal, although it must be said, many countries in the global south have moderated their view towards refining, towards taking Russian refined product also. So you are seeing more material volumes staying in the Western Hemisphere, going to places that they hadn't done so before. So the amount of inquiry from new countries contemplating taking Russian oil is fine. But I must emphasize, taking Russian products at below price cap. Because of course it is still awfully complicated to find, for most of these countries, to find the banking channels, the ship insurance, and of course the shipping and the banking to take oil.
Which is why ultimately, isn't it, that $75 is a good price, because it makes that uncomplicated, doesn't it? It gets that Ural spread. It's a viable thing for legal movement of Russian products and crude.
I'll answer that one diplomatically. I think I think, yes, the market will always find ways of balancing, and the price will adjust to the levels it has to adjust to in order to do what the world needs, which even the G7 leadership agree to and will publicly say, which is the Russian oil is needed by the world markets, and therefore the mechanisms have to work in a way that achieves their objectives of minimizing revenues whilst at the same time serving the purpose of keeping the market adequately supplied.
Just to finish off, Mike, on your outlook for the next 2 months, a natural period of lower volumes are traded. How could that impact the market?
Just to clarify, Sean, what did you mean by lower volumes traded? You mean,
well, the paper market tends to drop off a bit over the holiday season.
I wouldn't read too much into that. I mean, yes, we have had a much lower open interest, which I think I highlighted in one of these calls previously. So that still remains the case. There is a general lack of interest from the speculative components in the market, but also managed money in fossil fuels and oil in general. And yes, open interest is not what it once was. But by the same token, if you make the assumption that managed money and large funds wish to have a component of energy in their mix, then you can make the same argument I made before in the case of Iranian floating inventories, that at some point this interest might return. Now, many say that's not the case because oil served as an inflation hedge. if people take the view that inflation has reached a point where it's maxed out, then you don't want an inflation hedge anymore. But people don't just put petroleum, energy, gas in their portfolio as an inflation hedge. So it's going to be interesting to watch whether managed money stays on the sidelines now that we've entered the start of a new quarter.
Christoph, last word for you, your thoughts and outlook for the summer period.
I mean, just generally speaking, I think broadly flat with a light uptick. I want to flag two things. One is there is an enormous risk remaining from the war side that something goes wrong in Russia, or that decisive changes in the battlefield lead to political consequences. And as said this many times before, I would say it again, I would not put it behind the current Russian government to generate an oil price crisis if that helps them in other aspects. So that's one big risk. I agree with Mike. I would not read anything into a paper trade going here or there, because we know that they don't determine the direction of travel. They like us, try to figure out where the train is going.
Well, the physical traders also go on holidays.
No, but I mean, oil will still be needed in the holidays more than before, at least in the transport sector. And money staying at the sidelines, the only thing it does is less useful arbitration, and therefore generate probably a bit of more potential for volatility, but in a strange night. But I do think that as the Saudi cuts bite, as the US inventories continue to decline in the midst of driving seasons, and SPR reversal, and as the financial trading takes place there, and in London generally, we will see an upward drift over the summer. Maybe not very dramatic, but for now it seems this constant declines may have reached their bottom, and then in the fall we'll have to reassess.
Well, I think certainly in the coming week we were going to see some noise coming out of Vienna. I'll be there myself, and hopefully I'm hoping you guys will be there.
You're saying that makes for some noise?
No, not at all. But nonetheless, I will echo any noise I hear and share it on the podcast. But
no doubt. They will continue the cuts. This is pretty safe, I think, to assume.
Yeah, it's. But I also think over the summer, you also tend to find that news tends to have bigger vibrations, but the market reacts more sort of extremely to what.
That's because there's less of these very useful so-called speculators who arbitrate, stocks away in normal times. It's true.
And of course, we also have some more Fed moves expected in July, so that might have its own, where that resonates on the macro numbers. But Christoph, Roel, thank you so much. Have a wonderful summer. Hopefully, our paths might cross before September, but if not, take care and enjoy. And Mike Muller, of course, thank you as always, Mike. And look forward to seeing you both in Fujairah in October. Please mark your calendars, but before then, we will be in touch. Thanks, guys. All the best.
Bye, Sean. Have a good summer. Bye-bye.
Cheers, guys.
You too. Bye.